Welcome to Business Live. I'm Mark Croskery. In BL tonight, we're going to kick things off. The Jamaica Stock Exchange, that's our very own JSE, launches a cable channel here. They carried a listing ceremony or a renaming ceremony actually earlier this week. And as stated by the JSE, the Caribbean Business Exchange Business Channel, that is a CBX, launched earlier this week. Congrats to them and the JSE with another monumentous occasion here by the JSE in doing things big and better and right. Next up, we got CAC 2000 Limited. That is the large AC engineering company. Notice of their annual general meeting, hotly anticipated and expected. That's their AGM. It's going to be held on Thursday, September 22nd, 2022, right around the corner at 3 p.m. at their head office. That's CAC 2000, 231 Marcus Garvey Drive, Kingston 11. Now we looked over the resolutions. They all seem normal, nothing out of the norm or the extraordinary. Now we got QWI Investments Limited here, the investment firm. Their updated net asset value or their daily net asset value. As of August 25th, 2022, QWI's updated net asset value was Jamaican $1.28 per share. This is not their market price or their stock price on the JSE, but their NAV, that's the net asset value of the company. Now, Jamaica Teas Limited, that's Jam Tea here, trading in their shares as well. Connected party to Jamaican Teas, QWI Investments Limited, actually, which we just covered as QWI, sold 700,000 shares in Jamaica Teas earlier this year, February 18th, 2022. A little bit of a late notice here, but better late than never. Last up, overseas markets, US markets here. Gap Inc., well-known company, operates the Old Navy and Banana Republic brands as well. So 3 brands overall under the umbrella, including Gap, posted surprising Q2 or second quarter earnings. We've been covering on Business Live a lot of retailers coming out with very disappointing earnings and high inventory levels. We'll get to that. But what Gap did do is they shed the rest of their near-term or short-term outlook for 2022. So they're having some challenges just like everybody else in the US retail sector. What Gap is saying here, the changing macroeconomic environment, the changing customer demand, and yes, like everybody else, they're battling high inventory like many other retailers. So what they did do, yes, they surprised to the upside for their second quarter, but they pulled their full year earnings forecast of US 30 to 60 cents per share for the rest of this year. Now the inventory for the period just reported, it did close much higher, rising 37% year over year. Similar trend being seen throughout the US retail industry, department store industry as well. Now for Gap Inc., the 3 months ended July 2022, revenues still beat Wall Street expectations, but it did fall by 3.3%. That's something to watch, those type of statistics or numbers. It hit $3.68 billion US dollars, but the earnings were profitable. The forecast was actually for a loss for the quarter. The earnings were profitable, something we love on Business Live. US 18 cents per share for Gap. Big surprise here to the upside for the markets for analysts. I am Mark Croskery. Have a fantastic and great evening and weekend. This is Business Live.